Hey, in this video, you're going to learn how to control your Amazon cash flow to maximize your profits on Amazon. And today I'm accompanied by Orion Avidan. Orion is an inventory balancing expert. And this is the second time she's with us on the channel. We're going to have the first video down in the description with Orion as well for those who would like to check it out. And yeah, Orion, let's talk about cash flow today. Let's help sellers because it's a big problem on Amazon. So yeah.
Hey, Bubba, it's so nice to be back on this channel. I had so much time on the other time, so I had to come back. And yeah, so I asked to talk about the cash flow challenge today because I've noticed something that is very, very common in all businesses. As a business, we learn how to manage profits. We're always talking about our profits and loss. This will make this amount of profit. That's profitable. That's not profitable. What's your profitability? And we're focused completely on profits. And we assume that if we're profitable, cash flow will take care of itself. I'm making good profits. I have cash. It doesn't work that way. And I'm here today because I want to tell sellers to do exactly the opposite thing. If you start managing your cash flow and focusing on getting positive cash flow and better cash flow at all decision points, profits will boom. Cash flow drives profits and not the other way around from where I sit and look at things. Another thing that a lot of people don't know, and unfortunately I had the chance to investigate a little bit through my own experiences, is that most businesses that go under, that go into Chapter 11 and have financial troubles, those problems are from the cash flow part of the business. So a lot of times profitable businesses can't pay their debt and go into bankruptcy and go into insolvency because they have a cash flow problem. It's not enough to have profits. Profits are in the books. Cash flow is in the bank. And so as smaller businesses that are starting up, working, swimming in this pool of the big shark, Amazon, I want sellers to be very, very cognizant of their cash flow. If you have a good cash flow, you can survive everything. And if you have a good cash flow and you start pushing it up to be positive, you will have amazing profits.
Yeah.
But manage your cash flow and let the profits happen.
Yeah, that's interesting. And the mindset usually is like, if you are profitable, then, so to say, as you mentioned, the cash flow will take care of itself. But that's not the scenario, right? Because we can still get into problems, even if we're profitable, quickly, because our cash flow is not on point. That's why I would like for you to kind of share some tips from yourself to help us with this, because we were talking before we started recording the interview about the cases that businesses collapsed very fast because their cash flow was not on point and it just made them go out of business very, very fast.
So the first thing that is very important to understand with this is that inventory cash flow is inherently negative. If you're doing the standard white label Amazon process, you're buying in the Far East and you're shipping it by sea to the US, you have to pay for your inventory and for your shipping before Amazon even looks at your inventory. So you pay for a huge amount of the expenses before you sold even one unit. Then Amazon holds onto your money and Amazon gets paid first because they are the funnel through which your money comes in. They just take their money right at the beginning. Let's say we start selling on point 0. We pay for this inventory on week -10 and on week -6, and for the shipping on week -3, for example, and customs and all that stuff might come in there as well. Then when we start selling on week 0, Amazon starts taking money, but we don't see it until week 3 or 4 of the process. So we have this huge amount of time where this shipment is cash flow negative for us.
Orion, one thing, maybe for those who are not aware of what is positive cash flow and negative cash flow, can you explain what it means?
Cash flow, in the most basic explanation of cash flow, is this is what happens in your bank account. If you have to pay something, it goes out of your bank account and to the supplier, it's a negative cash flow. Something went out of your bank account. If you got paid because you sold something, you have a positive cash flow. If the total of all the things that happened today ends up being above zero, your cash flow is positive, which is where we love to see our bank account. And if everything that happened today ended up being more negative than positive, I had more expenses than income, my cash flow for the day is negative. You know, this is an amazing timing for us to discuss this because we're coming on Black Friday.
Mm-hmm.
And I've done a lot of research about what is the source of the name Black Friday. I thought it was some kind of holiday, like, you know, Memorial Day sales, Black Friday sales. So something happened on Black Friday, but there is no official explanation. The common accepted explanation is that some department stores figured out they have too much inventory going on to end of the year. They're going to have to count their inventory soon and going to have to take a loss because inventory was realized in a slightly different way then because we didn't have computers. So at the end of the year, when you do your physical count, you take a loss on all the inventory that you have to admit you're never going to sell anymore.
Mm-hmm.
And so just before you go into that counting season, you push out everything that you can to create a cash surplus. It's not a profit sale, it's a cash sale. The point of Black Friday originally, as per the stories, was to create a good movement of cash into the business. So they gave big discounts, got people from their competitors to come to their store, and had a good cash surplus, a good cash positive movement. And what that did is it moved their books, it moved their cash flow from the red, the negative, to the black, the positive, which hence comes the word Black Friday, the first time in the year that our books are in the black.
Yeah, interesting. I didn't know that.
And that's so sad. You have this big business, and I'm talking about the department stores, the J.C. Penney's, the not the Walmarts, Saks Fifth Avenue, that kind of thing. And they run 11 months of the year in negative cash flow, trying to get to positive. So even when they're profitable, most of the year they have a cash problem. And what happened, of course, is that worked very well for the first one. So their competitors copied it, and their competitors copied it, and it became a huge thing. But the idea that you bring in inventory to sell at a discount on Black Friday is ludicrous to me. It's
Mm-hmm.
totally wrong. That's not the way to make your business prosper and thrive. But the important lesson here is that cash flow is important to all businesses. Even if a business has deep pockets, it has a lot of cash from investors and from the bank and from loans, and they have a lot of, and their suppliers don't demand payment upfront like they do for us on Amazon. Cash flow still is the most important thing because one wrong move, if you're running that tight on the edge, one wrong move and the entire business falls down. As I was telling you before, I know of a business who probably by mistake got one of their credit card suppliers, one of the companies that were taking credit cards for them, decided that they were not up to par. They were not complying with the terms of the agreement.
Mhm.
And for 1 month, they would not send them their payments. It was just about $300,000, $350,000. That's all. That started the ball rolling, and within 3 months, the company was no longer existing. So when you get to that point where such a small thing can push you, it means you're very much on the edge. If you have really deep pockets, if you've just gotten money from investors, or if you've just had a really good year and you're flush with money, it will be harder to push you over the edge. It's just more time. It's
Yeah.
just a matter of time.
You're buying more time, but you're still destined to kind of go, maybe if we take it to the, go bankrupt or just get into more problems. Even if you won for a while some big amount of money, either from good sales, say Christmas sales, or you got an investor somewhere, or maybe a big loan on good terms, but still maybe you can be like happy for a while. But if you look at the numbers, you still are in some while are destined to get into problems again and again and again.
Yeah, it's a time game. And what my message today is that if we start managing the cash flow instead of managing the profit, if we stop, of course we want profit. Of course, profit is the end goal. Definitely. I'm just saying that day to day, it's much more important to look at your cash flow and manage your cash flow and push your cash flow to the positive faster, get more cash flow positive more time of the year. And profit will then become an amazing result. And you will have the stability. Right now, the way e-commerce runs their cash flow, every shipment is cash flow negative for about 85-90% of the time. So only the last few units that you sell are cash flow positive. Bring that specific project, that specific shipment to be cash flow positive. Now, of course, if you have a business that is running and you have a lot of shipments running concurrently, the business can be cash flow positive. But each of these shipments is a contribution that you can look at separately. And if those contributions spend 80-90% of their time cash flow negative, that is a high risk.
Yeah.
And if we're not looking at that, if we're not managing that, if we're not challenging that, it's just going to stay that way. And we're going to be focused on profits. Now, here's the biggest risk that I can see. If you have a shipment that is 85% cash flow negative, one change is all it takes to put it to 100% cash flow negative.
Mm-hmm, mm-hmm.
So you're chugging along, getting closer to zero from below, closer to zero, selling, and a competitor makes a move. You only had this little much where you can start to get profitable, and that was taken away from you. If we can increase the cash flow positive time on a shipment to 30%, I'm not expecting the shipment to start at cash flow positive. We don't have that available to us as sellers. But if you buy closer to home instead of buying from China and the East, if you local source, reducing significantly your supply time, if you negotiate with your suppliers on better payment terms, even just the fact that you can push a payment instead of paying down payment and at the shipping gate, if you can add another payment and say down payment and then maybe 50% when it's finished and ready to ship, and another 20% enough time after you start selling, immediately improves your cash flow.
Yeah.
Another thing that immediately improves your cash flow is reducing the amount of future inventory you are holding. If I'm selling today, I don't need next month's inventory in my warehouse. I need it to be in the supply chain somewhere because it has to be here next month, but I don't need to pay for it right now. I don't need to store it right now. And I don't need that money to be held up right now.
To sum up these little things that we've talked about, the three last things I would say. The first one is we would like to source locally closer to where we're going to sell. Say if we're selling in the States and we have an opportunity for a product that we can get in China probably for cheaper, but if we can find it locally in the States, then we automatically cut the shipping time, which is like usually like 30 days by sea, say, and hence we can start selling faster, right? And hence our cash is going to get back to us faster, our invested money, because say we invest X amount of money and we need to wait extra 30 days for it to get shipped, right? So that's one way to improve it. That means source locally, right? And also people like, for example, Canadians are going to like made in Canada, Americans are going to like made in the USA. That's number one. And the second one, we can negotiate the terms with our manufacturer. We can negotiate terms of the payment. For example, usually we pay like 30% in the beginning, 70 when we finish the product, but maybe we can negotiate it to a level where we can pay them even after they started the production, all right? Hence we can get the inventory maybe even to the Amazon warehouse and we still even haven't paid for it fully. That will take good negotiation, good relationships, right? But that's also a way to kind of improve the cash flow.
Mhm.
And then the third thing, usually what happens, sometimes we ship, say, 1,000 units and we start selling 5 units per day, which is fine, right? But it means we have like, 200 days to sell out. And we're going to have not going to have the positive cash flow because it's all sitting in the inventory and the money is inside and not in our bank. So we talked about this in the previous time as well. It's like small shipments. All right. So you got to have it somewhere in the production chain, right? Because we don't want to go out of stock, but it should not necessarily be in stock on Amazon because then we also
Right.
overpaid for the storage and we also overpaid for the product itself. All right. And so our goal would be smaller shipments.
I've seen this happen with a lot of Chinese manufacturers is that they will be quite willing to produce the big amount but ship smaller amounts. You do have a limit of time until when you have to pull all that inventory, but the fact that you produced your MOQ, your minimum order quantity, doesn't mean you have to ship your MOQ.
Yeah.
If you ask them, I've noticed this with manufacturers across the world. They're so used to having negotiations be on money and on payment terms, specifically, how much money do you have to pay me? That if you talk about anything else, they actually have very little resistance.
Okay.
Nobody ever talks to them about that.
Good point.
So you say, listen, I understand the MOQ is 1,000 units. I only need 200 units a week. Can we do the shipments divided and I'll pay you each time you ship? So you don't have to pay for the 100% on production. You tell them, I'll pay you at the factory gate, but for each shipment, I'll pay separately. And from my experience through other sellers, it's easy as pie. They just say, oh, yeah, sure. They'll give you their terms. They'll say, yeah, you have to take it out within 3 months or something. But it's so much easier than trying to shave off another cent.
Yeah, interesting point. So 30% Orion, right? Say for 1,000 units, we pay 30% of whatever the price is, and then we try to negotiate that. for example, whenever we will ship, and maybe we will negotiate maybe weekly or bi-weekly shipments, then we're going to say, okay, once we are ready to ship these 200 units, we'll pay you the 70% for them. And in another 2 weeks, we will pay you 70% for the other products, and go.
And another thing that I have found you can do, it's a bit more advanced. If the supplier is buying and producing, so they buy raw materials for you, for example, a colored fabric or a colored material, and then they cut it up and sew it for you. That's your order. You can agree with them on buying a full batch of the color product and then cutting and sewing only part of it. So you have to commit to the whole batch of fabric because you're the only customer using it.
Mm-hmm.
But that doesn't mean they have to manufacture the entire thing at one sitting. I have a client who has this situation. She has 3 sizes per color, small, medium, and large. So we told them, we want you to cut this amount of small, this amount of medium, this amount of large, and hold on to the rest. We'll tell you in 4 weeks how to cut that. We'll have more information in 4 weeks. Maybe right now we know we had a problem when she started selling this. She had an issue. She was looking at the market behavior, and what she didn't know was that her competitors were missing one of the sizes. So the market could only buy 2 sizes out of 3, and she had no information about the 3rd size. Turns out, of course, it was the best size.
Mm-hmm. Mm-hmm.
And she bought only a little of it because it wasn't selling when she did her research. So that went like fire and then she stopped out. Now she needs more.
Mm-hmm.
So we know we need more of the size that was missing, but what about the other 2 sizes? Are they really that slow? Maybe they'll pick up.
Mm-hmm.
Maybe they're actually slower. So just by delaying our decision making, we have the chance to make better decisions.
So, for example, we in this example, we buy an X amount of raw material, right? And then we say, wait, don't use all the raw material to create, say, some wooden toys, right? Let's say we buy some wood and we say, wait, don't use all that wood to create these little toys. Let's start by creating 1,000 wooden logs. We're gonna create from 200 of them, say 4 variations of the toy, and let's wait and see how it works.
Mm-hmm.
So this way, again, we save money. It will cost us less, right? Because if we straight away produce 1,000 toys, again, we go cash flow negative faster, right?
It's 2 things. One is if you produce the entire 1,000 units at once, you have to pay the supplier for all 1,000 units.
Yeah.
The other thing is much more important, actually. Once you cut out that wood, that fabric, that leather, that plastic, you can't put it back. There are very few materials in the world you can come to your supplier and say, you know what? I want something else. Put it back in the oven, melt it, let's do it again. If you cut the fabric to have the medium size, it turns out the market wants the small size. You can go down, but you can't go up. If we cut the small size and actually we need more medium size, we have to buy new raw materials. The materials that we cut are actually scrapped. We paid for scrap to be made, and we need to make more. Now, raw materials are usually bought in batches. Mm-hmm. You can't go to your supplier and say, I want 2 feet of fabric. You buy a full roll. Mm-hmm. So your supplier will want to buy the raw materials in batches because that's how they're available. It's much more expensive to buy them in smaller amounts. So as long as you buy the raw material in the full batch, You can ask for a lot of flexibility with the production of it. You paid for it, it's yours. So it sits in his warehouse. It doesn't take up a lot of space. I mean, unless you're a huge production facility and you have a ton of different raw materials. So he has 2 or 3 rolls waiting for you on the side. It's just very intuitive for us. There's a lot of inertia. I bought it, I produce it, talk, 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 talk.
Okay, I see what you
But
mean.
it's not necessarily that way. It's like when I go to the supermarket for myself and I want to make a cake today. It's almost the weekend. I want to make a very special cake and I'm going to buy something very special, extract with banana flavor. Never use that. I don't use banana flavor a lot. So I'm not going to put the entire bottle of banana flavor into my cake because I just bought banana flavor. I'm going to put a few drops. I'm going to wait for my next cake to use it again. And we don't do that in business, but we can. And that's the important thing. You don't have to do things differently just because it's business. There's a lot of logic that we employ in day-to-day life that is very good for business. It's always really a good idea to take a step back and think, if this was the supermarket and I was buying for home, for myself, for my kids, how would I do this? Would I take the big batch where I only need about 10%, but per unit it's really cheap? Or would I pay the expensive unit price, but I only buy one?
Mm-hmm.
So there are things in business that make us look at money a little bit differently. And some of those things shouldn't be used. They have been introduced into our lives because of tax reasons. So just 2 very clear examples. I hope I don't go to 3 because I tend to do that. One is inventory. Inventory that you haven't sold yet isn't part of your profit and loss. From a financial accounting point of view, that money has not been spent. When I go to the supermarket to buy my family bread and eggs and milk, everything I buy, I pay for. So our family is minus X amount of dollars because of the weekly shopping. When you buy inventory for your store and you pay your supplier $10,000, your accountant will take that $10,000 from the cash line and put it into the inventory line in your balance sheet, and it will not be considered an expense at all. They're both assets. Cash and inventory are both assets. So your profit and loss is not going to show this. You did not spend $1,000 or $10,000 on inventory this week. Inventory is only accounted for when you sell it. That's the COGS. Now, small businesses, I know in the US, I think also in Israel to some extent, maybe other places, they can decide they want to be cash-based. I don't know the exact financial accounting term, but you can tell your accountant you want each and every expense to account as an expense right away. Mm-hmm. And that's a healthy thing to do for a small business. I highly recommend that. So every time you buy inventory, your profit is going down by that amount of money.
Okay.
But you don't account for it as a COGS when you sell it. Mm-hmm. So that's one thing that is different. The other thing that you have in businesses you don't have at home is depreciation. So if you want to buy a new TV for your living room so that everybody can come in together and watch a good movie, and you pay $500 for it, your family is minus $500 in their cash flow. All right. But if I want to buy a new computer for my office because it will make my business better, and I pay $500 for it, my business isn't minus $500 in the expenses, because this computer has to be depreciated over several years. Mm-hmm. And that's a tax consideration. That's a way to make sure that I have to pay tax this year, even though I had expenses. Because specifically machinery is big expenses, and it can bring a factory to the point where they don't have to pay tax for a year or two. The decision was to depreciate. So you just pay for, you get a tax redemption for only a part of the machine this year and a part of the machine next year and a part of the machine next year, and so forth for several years. As a business, in the year when I made the big expense, I get very minimum help with my taxes because I still have to pay taxes as if I didn't buy most of the machine. Mm-hmm. Next year, if I survive, I'm going to have a bonus. I'm not going to spend money on the machine, but I'm going to get a deduction, a small deduction about it. And that changes the way we look at our financials in the business. So after I've said all of this, let me remind you why I started. I want you to start looking at your business as if you're shopping in the supermarket. Don't let the financial accounting practices that came from different worlds impact you so much. And I just gave you a few examples of where accounting changes the way we do math on money in the business compared to home. Try to look at your business the way you look at your cash flow at home. It's very simple, money in and money out. Don't let the advanced mathematics and non-realistic physics of accounting impact you that much. If you're going to spend $10,000 to buy inventory, that's $10,000 out of your pocket. 30% down payment, 70% at the factory gate or whatever. That's when the money goes out. Those are the numbers.
I understand. So just to, as you mentioned, to make it easier to understand, because it's so a little bit complicated, but to make it seem easier, think about kind of your business as your normal home expenses. Or say you go to the supermarket, right? And say we need toilet paper, right? Now you have the option to buy toilet paper for the whole year, right? Which you can do, right? But then you're going to have to invest a few hundreds of dollars, thousands of whatever that is, depends on the family size, right? But then you're going to pay it in one boom, and then your bank account is going to go to minus, say, $3,000. Rather, you can buy just like enough for a proper week of using the toilet paper, and then the next week we're going to buy more toilet paper, and then your bank account is not going to go straight down minus 3,000. It's going to go minus, say, $70 say a week, then another 70. Maybe that's an easier way to look at that. Just, if we
it's an amazing example, because here's another thing. If I buy toilet paper for the whole year, I'm going to need a room for toilet paper in my house. So storage cost is going up. And I got to see a few clips of what is called amazing couponers, or extensive, those people that buy with coupons in the US. And you see them, they go to the shop and they buy $1,000 stuff for $7. Mm-hmm. Wow. And then the camera goes into their home and they have one room just for detergents and this, and the other room just for boxes of food, and another room for the newspapers where they have to find the coupons to clip. Mm-hmm. So you saved money in the store, but in the overall picture, not sure you've saved that much money.
Yeah.
If at all, because you need a bigger house, you need a bigger car, and you have a lot of stuff you're not using.
Yeah, makes sense. So what I understand, yes, from this interview today, that we don't want to be these people that buy all or fill all their house with stuff they bought with coupons. So, or even without coupons, whatever, but whatever seemed like a deal, or even if not a deal, generally, we don't want to fill our house, or if we take it to the Amazon example, we don't want to fill our warehouse with products that will just sit there and we're going to overpay for them, right? And also that means we invest big amounts of money for it to sit there, and it doesn't really make too much sense. So we gotta balance. As I mentioned, you are an inventory balancing expert, hence you were able to share these things with us, this wisdom of inventory balancing. And also, as I mentioned the previous interview, maybe I said it in this one as well, for me it's one of the biggest problems, because it also changes all the time, right? What do I mean by that? Competition enters, maybe your sales go up, so you're like, wait a minute, today I'm selling 20 units per day, suddenly because I did a few changes or luck or market things, suddenly I'm getting to 60 units per day. Wait, how many units do I order now? That looks like today I need to order 1,000, but maybe in 5 days my sales are going to go down. So I kind of need to be aware of that as well. But generally, I would not want to make quick decisions and buy huge stocks, which I sometimes do still, because it's just, or maybe it's habits. Yeah, bad habits. But yeah, we don't want to go to a position where we're risking so much, because a little mistake or maybe a little market change can literally leave us without money, and then we're going to grab another loan if we're able to, or maybe if you're already loaned up here, they're maybe not going to give you a loan, and then you are in a position where you can't even get money, so then you need an angel or something or whatever, and so that can go really bad. So yeah, I see your points today. Pretty cool.
So, and if we go back to the beginning, managing your cash flow and understanding your cash flow, when is each shipment going to become cash flow positive? And how can I make it faster? How can I push it to be positive faster? How can I shrink my cycle times? All of that is going to be so helpful.
And also, you've mentioned that you have your 30-day inventory kind of balancing challenge. Do you want to tell us more about this?
Yeah, well, because cash flow is not predominantly taught anywhere, together a small part of the cash flow process. We will map and understand your cash flow situation, your cycle times, and your shipment cycles. Then we will look for all the places where an Amazon business usually bleeds money. There are a lot of places where simple changes can make a lot of cash appear in your bank account, which is so much fun. I mean, it's just, sometimes it's just a matter of contacting Amazon and telling them, you got my dimension wrong. Again, I just talked with a client. Amazon made a mistake of 0.2 inches. That is going to cost her or not cost her $7,000.
Yeah.
Just a tiny mistake with a meter can cost so much money, and you have to be so aware of it and know where to look for it and how to manage it. And over the years, I've got a lot of contacts that I'm going to share with you as to people who can help you do that faster and easier, of course. And eventually, after we understand everything, we clean as much money as we can from Amazon to your pockets, we will build a plan to have you control the cash flow and take the business where you want to go instead of just playing along. It's intense. Yeah. It's really intense. There's something to do every day for 30 days. Some of the days I try to just, here's an idea, think about it. And some days you're going to have to go and look for your data. You're going to do advanced Excel stuff. I'm teaching you everything, of course, pivots and because we have to take data out of Amazon. Amazon doesn't want you to have good access to your data. I do, so we have to fix that. A lot of work to be done, but also a lot of understanding and control to be had. And it's a Facebook group, that's closed group. You have access to all the videos. You have access to me for any help that you need. I think it's a lot of fun.
I see. Pretty cool. So the idea of the challenge is to help sellers balance their cash flow and make it more towards the positive side with
Yeah.
whatever tricks and knowledge you have with practical stuff people will have to do during specific amount of time where you're going to be present for them, plus videos plus group to make them bleed less money. Pretty cool.
Yeah.
I'm going to link to your kind of a place where people can sign up for that. It's going to be like an email. It's not an affiliate link. It's generally a page for Orion's
It's
challenge. So
just a place where you can contact me and we can have a little chat, see if it fits you.
yeah. Also, I want to remind the viewers that we have another video with Orion, which was the previous video where we also were speaking about inventory balancing and the cash flow. Is going to be down in the description of this video for those who want to watch it. And also, I'm going to link it in the end of the video. It's going to be an end screen. But Orion, another thing I would like to ask you, maybe a little bit less connected to cash flow, more connected to people who Amazon sellers, they hustle, right? We're trying to build businesses, we're trying to provide for our families, for our communities, for ourselves as well, and you too, I believe, right? So what I wanted to ask you is like, what makes you do that? Like, what keeps you afloat while you are doing this? Maybe what for you, yes, for you, what is this thing that, or a few things that just generally make you continue going? You wake up in the morning, you start your day with whatever you start your day, and then you start the grind, right? In a way, right? You do something, and probably no one tells you, hey, Orion, like, you gotta do that. No, you probably do that because
It's really, really funny. The thing that brought me into this space
yeah.
is a dream that one day when I go into the shop or on Amazon and I want to buy my stuff,
All
like
right.
I used to say to my husband that if I like something, it's end of life. Whenever I liked, like, yogurt flavor, they stopped doing it. Whenever I like a color, it disappears. And my dream is that when I go into the shop or to Amazon or to e-commerce, they have my color, they have my flavor, they have my size. I'm kind of an Amazonian woman. I'm not really big. I'm not like, NBA tall or big to any dimension, but I
Okay.
don't have the regular sizes. I don't have the regular taste of people around me. I
Huh.
kind of like to work quirky things. And I have a big shoe size, I have a big shirt size, all kinds of things that aren't standard. And the most common thing I used to hear in my life before Corona was, we don't have your size.
All right.
Now with Corona, I just don't buy anything. That figured that out very well. But my dream is to go to the shop and say and hear the words yes. It's like the Disneyland of shopping, where you go into the shop and you say, do you have that? And I say, yes. Do you have it in my size? Yes. Do you have it in that color? Yes. 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 Here's my card. Thank you very much. That is a dream come true. And people say, well, that's very commercial, you just want to buy stuff. And I say, no, the reason people are buying so much, the reason there is so much consumerism is because people aren't getting enough satisfaction
Hmm.
from the purchasing they're doing. I want to buy the purple notebook for my class in college. They don't have it. I have to buy green. So I want a discount because I'm not happy. I need to find that happiness somewhere else. So I want the green one, but it's in discount and I have to buy the blue one as well to get the discount. Because if I don't get the discount and I don't get the purple, I'm really not satisfied. And it sounds extremely shallow, but it's a very deep, deep thing. If people could buy exactly what they want each and every time, suppliers or sellers will give less discounts and buyers will get more satisfaction. So you see, it's a win-win situation.
Okay.
And we will stop creating a ton of crap. that we need to make right now, because we need to make things that we can sell for cheap, because we can't sell the things that they want for full price.
I understand. So and hence you've gotten to helping sellers with balancing their inventories and cash flow, so they can be more efficient, so they can get the things
The balance, there is only one thing you can balance your inventory to. I mean, you can balance it to a ton of things that don't do anything good. The only one thing that will give you good results is if you balance your inventory to the demand.
Right.
What's the point in balancing my inventory to Kim Kardashian's mood this morning? I don't know what. What's the point of balancing my inventory of reds to my inventory of blues? That doesn't mean anything. But if I can balance what I supply to what the market demands, I got something. I got a real possibility of results.
Yeah, you've created something valuable, and they they rate it by paying you the money that you demand from them, and then everybody's happy because
yeah,
you provide a quality product. They are happy to pay the money because you satisfy their needs and wills, and everybody's happy. The world is happier, and sounds good, right? Yeah.
And we stopped creating a lot of trash.
Yeah, I see. Nice. Well, let's hope that we get to that and we'll be able to balance our inventories better. I'll drop my habits of overbuying products that sit in my in warehouses. But actually, since our last talk, I've had a lot of thought, and I think I'm doing better. Yes, and this appreciate that a lot, and hopefully the sellers that are listening to, they are doing better as well. And now it's the Christmas time almost, and what we're now, like, it's 19th of November. Yeah, we have about a month and a few days, like the Christmas sales end somewhere on the 24th of December, and then it drops. So we have about a month of having some fun, getting bigger sales. And hopefully with all the cash we get right now from these sales, next year we're going to be more thoughtful of how we spend it, so we can have an even better year, cash flow wise.
Yeah, I have to say that right now with Q4, and specifically the Corona Q4, this isn't a really good time to start thinking about stuff. Keep your head above the water, keep swimming, keep paddling, just get to the end of the year. I know it's a really, really challenging year. Mm-hmm. If you have the time and the space to start thinking about how to do things differently, sure, do it. I'm not ever going to tell somebody to not improve. Yeah. I just understand how challenging right now is. And I want to make sure that nobody thinks I'm telling you to switch your priorities. Get the best Q4 as first and foremost, any way you can, because you can't start in the middle of something.
That's true.
And then in the beginning of the year, take a deep breath, look back at what happened, figure it out a bit. And if you need any help, of course, reach out, and I'll be happy to help.
Perfect. Orion, thank you for being with us today. Down the description again, I want to remind that we have Orion's kind of landing page where you can sign up for the cash flow. Just drop her your email and talk to her, see what can be done. And hopefully we're going to have you again here with us for another video. And yeah,
I'm always open. I'm always open to that. I enjoy it so much.
Thank you. And yeah, if anyone has any questions or advice or whatever you want to share, comments, please drop a comment. Also going to be
cool. Guys, please ask hard questions. Challenge me.
Yeah, right on. Perfect. Thank you, Orion. Thank you.